Hello everyone. Welcome to the PivotBoss monthly market outlook for the month of October 2020. We're already into the first trading day of October here on a Thursday afternoon. Thank you all, number one, for joining me for the monthly market outlook. If you don't know who I am, my name is Frank Ochoa, also known as PivotBoss. I wrote a book called Secrets of a PivotBoss many moons ago that has continued to receive quite a bit of great feedback day over day, week over week, year after year from traders all over the world. So thank you so much for that feedback that I get every single day. Again, my goal was to deliver a book that provided great foundational knowledge here that can be applied year over year and really decade after decade, and that's what we're seeing. No matter what type of market, whether you have a super high volatile market, whether you have a very quiet period of trading, as we've seen in this chart, you go from very quiet trending behavior to incredible volatility. But what has stayed constant is our tools and the foundational approach that I lay out in that book, which is pivot-based trend analysis, looking for compression that leads to expansion, looking for key extremes and for rejections at those extremes, looking for reversals and playing those back to value. Those types of concepts continue to hold true even in this market. So again, if you don't know my book, Secrets of a Pivot Boss is the title there. You can go to pivotboss.com and check it out. And what I wanted to do here was start off with some futures here. We're going to look at several of the futures markets from a seasonal perspective and also just from a basic price perspective here. And then we're also going to look at several stocks that have a lot of different setups here heading into the month of October. And then some of these candidates are also longer term candidates that can play out into the end of the year. So not only some short-term plays being 1 to 5 days out, but also some month-long plays and some plays that can play out over the course of the next 2 to 3 months heading into the end of the quarter. So let's go ahead and get started here with the monthly market outlook for October. If you have any suggestions or have anything you want me to look at, please put it here in the webinar chat and I'll be happy to do that. I see UPS and FRG are on the list. Again, if you have any others, please let me know. All right, let's go ahead and get started here with the ES. Now, one thing that's really important about the ES is the weekly time frame. This is something we've talked about for quite a long time in our trading room. We've moved to a new trading room, by the way. It's the PivotBoss EchoFin 2.0 trading room. You can find it at pivotboss.echofin.com. Previously it was .co, and now the 2.0 version puts us to .com, and all of the codes are now ready to go from every link, so you should be able to subscribe here and join the new room. And what you'll see here is something we've talked about for a while in the room, which is this expanding range here, big time expanding range. We've had it in play for quite a long time, and we've known what to look for and when at certain times, including this move here. We thought that at first I thought we might be due here, but when we exploded higher, it was like, okay, now we've moved the ball game a little bit to this edge, and now we're going to sling it back perhaps as low as this low here, which we got. Initially, when we started that sell-off, we talked about 2200 being the ideal bounce zone for the ES, and you can see how it bounced and then came back and took out the highs. So this has been tremendous since the beginning of the year to see this play out. One of the most volatile years, if not the most volatile on record here, especially in terms of price percentage and how big these moves have been. But one thing that stands out is that these edges are still very important. This level right here is basically 3400, and that's the level we're seeing right here. We exploded through that level here in the ES, and we failed back below it, and now we're bouncing here and retesting from below. That also coincides with a lower value relationship. This is a weekly chart, but look at the lower value relationship for the month. So this was a higher value relationship month over month during the uptrend, and those are opportunities to buy the dips and push it higher. Buy the dips and push it higher, right? Buy the dips and push it higher. As soon as it fails to hold that midpoint, things change, and now you may be looking at additional weakness ahead if price cannot reestablish back above the midpoint of the previous month. So the midpoint is the top of that line right there, that pink line, which is 33.92 half. 3400 is just above it. 3400 quarter is the FOMC key level from September 16th. And those are very, very important pivots, right? If price cannot find acceptance through 3400, will we see a lower high develop? And if so, that means a lower high tends to lead to a lower low, which means we'd be testing back toward the previous month's low here. So 3400 is very, very important. You can see the higher level key pivot here, which is that high, which is 97 half. 92 half is the previous month's midpoint. Then we have 3400, 3400 quarter. Those are all right there in that zone, lower value relationship. So this is going to be very, very interesting here to see if the market is going to be able to find acceptance above 3400 soon. That's it. That's the ball game right here, which is the previous month's midpoint. That's the previous month's high, previous month's low, previous month's mid. And as I mentioned in the trading room today, the move is either going to be to this edge up here and likely back down, or it's going to be down to this edge and likely back up as we head into the election here, 11/3 in the United States. So hard to see this thing rallying into the election date, but stranger things have happened. Our main storyline for our September outlook was that after a bullish August here during an election cycle, we would likely see a weak September during an election cycle. And so since the year 2000, we looked back and we saw that this was typically an up month in August, and usually on average it's a down month. And then this was usually followed by an average of 2.2% down for September, and we've seen that weakness. As a matter of fact, when we had that last monthly market outlook, it was right here on that day, and it was right on the money and right on schedule, which was perfect. We got our pullback. But now that we have our pullback, do we now have our boundaries as we head into election day? So what we could see here is price become trapped by this range as we head into the election cycle here, or perhaps we see a little bit more of the risk off. You know, many times you see risk off ahead of that, or at least a compression ahead of that event. So again, that midpoint is going to be important. If it can get above that midpoint, it opens up this level for a test and perhaps back down. And if we fail at this midpoint, we drop down into this zone, and that could provide a bounce back up. So that's the framework right here I'm working on. Again, because of the increased volatility state of this market, and because of the potential, well, there is uncertainty heading into the election, but then also for the potential for that uncertainty to extend given mail-in ballots and things of that nature. The market, it'll be interesting to see how it responds to that, because what could happen is, risk off approach and kind of a wait and see approach. And if that's the case, then these prices up here are not likely to be traded. Instead, it's going to stay down here where it's been happy, which means maybe a little bit more weakness. So we have the level to watch. That's the most important part. 3400, 3400 quarter is the FOMC key level. Those are very, very important. Alright, so I guess this is where you have to start kicking people out or something like that, right? unless people can behave, I guess. I don't know. Now, in terms of the Nifty, Bank Nifty from India here, I would love to do that here um, if for example, I can uh, plot it. So if you can give me a symbol here, because I don't know if I was able to plot it before in Thinkorswim, but perhaps I could. If you give me something here that's plottable, I wouldn't mind. Okay, let's see here. We have NQ next. Oh, for the symbol for the Bank Nifty, National Stock Exchange of India. It's an index. I think is it the Nifty 50? And so I don't know it. I tried looking before and wasn't able to really get a good symbol for it that I could see, but maybe I was not getting the right symbol. So if you can help me out with that, I'd love to check it out. Okay, what you have right here is the NQ. Again, very, very clear test of the previous month's midpoint there. That is very important. You have that midpoint, the previous high right there, and you have it a previous low right here. So that's your key range right now, or at least your range, and we're right at that midpoint. So can price stay above 560 or 600, better yet? 600 is very, very important. Above 600 opens up 12,500. A rejection at 12,500 returns price back down to 600, and perhaps it could trade in this upper distribution. So right now we've basically had that swing move up, we've had the pullback, and we've now traded in here. You can see kind of this ill-shaped profile. You know, to become a D-shaped profile, you have to trade in this upper area soon. So again, it's that challenge of the midpoint of the previous month's range. That's going to be very, very important. Can it get above 11,560, 11,600? If so, then there's another 1,000 points of upside that could be seen and then back down. So again, we have the key level to watch, and for the most part, this market remains extremely bullish. Tech remains extremely bullish. We've had our pullback, and the pullback was just a normal, necessary pullback. It wasn't something much more elongated. However, that can change with this rejection here, because like we saw last time, this was a normal pullback, big pullback, but then as soon as it got into the lower value relationship next month, that's where it changed, and boom, flush. That's where we're at right now. Pullback, yes, and now we're right there, and if it can't get above it, flush again, and maybe we get down here into 97.50, maybe, you know, into the 10.3s, somewhere in that zone. So again, this is a very, very important zone. So far, it started the month here strong. We will see here if we can continue higher from there. Let's see. Let's try Nifty here. What should be the price for that one, by the way? Because here's one right here that is 1,630. 11.4. Okay. Because if I can nail down this, that would be nice, because I know a lot of you ask for it. Let's see. There's 11. No, that's not 11. So maybe it's doing something different here, where it it changes, yeah. I'll keep looking for that one. And then here's NFTY. We'll see if that one works. That's the Nifty 50 ETF. So this is really good right here. This is good enough for the ETF. Oh, so it's the question is for the Bank Nifty, the Nifty 50, I think from India, the Indian index. And this one right here is the ETF version of it, which is good. That's good in and of itself. And that's good enough right now to give us some data to work with, and we can work on a better symbology there so that we can get a more clean symbol. But for right now, this is good enough here, where I really like the impulse sell-off that we see here with a strong pivot low and a bounce back to the mid. That gives us a great key range, and that gives us a range to give us extensions for. You can see that value is up here. That's value according to how much volume at that price has traded. Again, this is a very illiquid here ETF, but at the same time that is currently value. And so after rejecting here, you would think that at some point it returns back to value unless it creates new lower value first, in which case it would shift down. With this right here, you have a great impulse range, and that's 36, and this is 21. So that's 21 to 36 is 15 here. So you have the 51 zone right there, which is right here. So that right there would be the upper end of the zone here based off of this range, roughly speaking, right? 21 to 36 here, 36 up to 51-ish, so between 52 and 50. And if you look at this overall as being eventually a D-shaped profile, you've traded some down here, now you have to trade some up here. So ultimately down the road, this looks like a good shot to continue higher based off of this key range. And it's a strong reversal low with a good LVN up above. So as long as this thing can hold 26s, it has some upside here ahead. And one last thing I'll say about this one is right here. Based on market structure, right? You trade inside this market structure for a while, and then you can fall out of it. But as soon as you reclaim it, you tend to go to the top of that market structure. And then you likely trade back inside that range before you either extend it and create new market structure above or fail back below, right? So right now, based on this hold at 30, I think it has a good shot to 37, 38 in the near term. So that's some thoughts right there on this one. Okay, I want to talk now about gold futures. And here is gold futures. One thing I've mentioned in the pre-market videos, if you watch those in the morning, those are the free pre-market videos that discuss the ES, the NQ, crude oil, and gold. And one of the things I mentioned was we were in the ideal buy zone here, the ideal buy zone, and that's an ideal buy zone that I didn't mention at that moment. We talked about that way back here when price bounced back up. We mentioned if we get that 1981.70 here, the ideal buy zone will be somewhere down here between 1831 and 1875. And then that could lead us back to 1981 very quickly. Perhaps it can get us up as high as 2089. And then down the road, based on this key range here, we have 2200 and 2300 as the upside targets here and here. So that's very, very important there. So again, this is an impulse sell-off here that's given us a very good range. That range has wiped some folks out of their positions, so it was a shakeout move. And then from there, it has reclaimed the key range low here at 1874 and could be easily headed back to 1981.70, and perhaps down the road, months out, we could be at 2300, right? Because we have this target to contend with, and that one and this one. And that's all if price can continue to hold 1874. So the lowest amount of risk is here in this zone. Now, how did I know here? Let's see. Okay. Let's see here. So back then, again, this is what I love about our analysis here. Oh yeah, I did talk ES a little bit earlier today, at the very start of this thing, which basically amounts to watch 3400. 3400 opens up, 3600 above, or rejection at 3400 returns price to 3200 pretty quickly. So 3400 is the big time level to watch in the near term, and it'll be up on the recording as well. So what I love about our analysis here, if you're not familiar with it, there's many forms of analysis that I use. It's all price based and volume based, or a combination of price and volume based. And so the price based analysis would be, say, the previous high low close of a market here to help me get pivots for the next period of time. This impulse high to this sell-off impulse low, and when it comes back to the midpoint, gives us key levels now. And I know that rejecting this low down here is the best bear trap for a return back to value. So that's why ahead of time, back on this date, I mentioned to our traders, and I mentioned even in the market outlooks and the pre-market reports, that this is the range to watch. So we've seen it come out and play out the way we thought. Now, what's the last thing to watch is basically the 1925s. Again, it's the same thing that the ES and the NQ have to contend with, and it's the previous month's midpoint, and it's basically 1926.10. 1926.10 is that pink line right there. It's also the breakdown point, right? So when this thing broke down, it's coming back to that point. This is a lower value relationship. Nothing says gold has to go up. It's just been on a tear here lately and continues to hold market structure, so why wouldn't it continue to go up? If the market's going to see a bit more risk off heading into the election, then perhaps defensive play comes into play. So there's a lot to see, there's a lot to like about this thing likely going up. But at the same time, 1926.10 is very important here. A rejection here could easily lead this thing downward, and we could be looking at a move much, much lower here. So that 1926 is very important for bulls. The 1874.20, if we drop down away from here but instead reject, man, it'll slingshot price back up, and then it opens up some big time upside ahead. So for gold here and its equivalents, whether you're looking at GLD or any of the others, all of these right here have a good shot here to continue much higher if it can just hold these levels, right? And right now you see I have a different key range here, but if it can push through these midpoints, it really opens up some upside here. Otherwise, we may have another round of downside coming. All right, I wanted to get into seasonality here for crude oil. You can see crude oil has been sideways here for a while. A lot of sideways here. Let's see, we're doing this and this, and we've gone sideways here. And so right now we see the potential to see a major explosive move this way, or perhaps really fail with this rounded behavior here. One thing I wanted to update you all on is the key range here. I went ahead and updated this key range high, key range low, and the midpoint test from recently. That sell-off and bounce back has given us these new boundaries, which I think are the main boundaries to watch. We have a 36 low here, which takes us all the way back here. And we have a 44 high up here, and that's basically been the range on either side of the midpoint of 40 even. So if we were to break to the upside, we have a great shot to return back to the scene of the crime where the breakdown occurred down the road. So over here you have this breakdown right there, that breakdown right here, right? And here's your key range right there. And if we break to the upside, that 150 right there would be the 100% of range target, which is about 52s. So that's a great, great target up there to kind of return to after all of this weakness we saw in this collapse. Great, great target up there. And theoretically speaking, we could come down here and reject at 35, 36, the key range low, just like we talked about in gold. Down here would be the ideal zone between 35, 36, and then you return it back to 40, return it back to 44, and likely up toward 52, and value at 52.84. So that's the idea right now. We could theoretically drop as deep as here, 34 even, and 34 to a 52 could be ahead. This range right now is very, very compressed. But now if we fail to hold 36s, we return back toward 28.50. 28.50 would be kind of where the breakout point was back here. So if you look at this being the breakout here, we rallied. So it all kind of lines up very, very nicely according to this key range. That's the next one. Now the hard part is knowing when we'll see that move develop. We could easily stay stuck around 40 for a while before we see something play out. And that's where seasonality may help us, right? So if we go over here and we bring up chart mode and go to seasonality, I'm going to bring up show price as a percentage. This is what I want to show here. And let's bring this down. This is what tends to happen here in terms of seasonality for crude oil. Right there, that's the high. And that's October 5th or so. So let's bring that down. Oh, October 10th. And look at the move down we tend to see on average into the second week of November. That is a tremendous pullback we tend to see, and that's on average over the last 5 years. And if you look at that, you know, from over here, call it 12% down to here, 1%. That's a good 11, just call it 10% different on the correction here of how far that can pull back during that period of time. So it tends to happen. You see that big pullback. Now if you look over here for a 10-year look back, this 10-year look back, let's bring it down again right here. This is even more significant here because now here's your high here, which is already dropping from there, and then here's your October 7th or so. Oh, let me grab that line again right there. Here's your other peak here, which is about the 10th again. About the 10th or so. And then you have this drop that happens percentage-wise where you have plus 2% down to minus 6%. So that's a big difference again on average into the end of the year here for crude oil, where the decline begins sometime in the first week to week and a half of October, and we start to see that weakness. So just from that perspective here, again, we could be looking at some weakness ahead from a seasonal perspective. So again, keeping an eye on this key range low right here is going to be very important. Can we hold that key range low? If price drops down here, does it bounce, or do we start to see some weakness away from this zone? One thing that I see right here is this narrow pivot range, and because it's narrow, that tells us that there tends to be a bit more energy that could be in store here, and we could have a higher energy month, more volatility, more range. It doesn't all necessarily have to be in one direction. It could drop hard and bounce. So this is going to be definitely one to continue to watch, but the key range is there. All right, I wanted to talk some stocks now, and I thank you for posting some candidates to look at. Since we were talking seasonality here, I wanted to talk seasonality first with Lowe's. This is something we discussed here in our trading room last week. But seasonality, if we bring up the 5-year seasonal chart here for Lowe's, again, show prices percentage. One thing we tend to see here, and again, this is just such a significant move compared to average. We don't normally see pandemic years, but that's what happens. This is what we tend to see right now. From this point forward, right, we're October 1st. Just call this October 1st somewhere about here. That's October 5th, okay? So October 5th. But you can see we've already started to drop from here. That's the 28th. And we're already on our way down. This takes us to about the end of October, right? The last week of October. So for the month of October, this thing seems to drop on average. And then you buy last week of October and hold into the end of the year, and that tends to be a very, very good buy. That's an average again. And the average here is pretty good. I mean, you're going from 6% to 13-14%. That's a plus 8% easy, depending on, again, what part of the curve you are in the zone. But that's a pretty good move. Now, again, that's just a 5-year look back. If we look at the last 10 years, this is the last 10 years. And again, this is just average seasonality, right? So it's just average. There's nothing that says this has to play out this way this year. This is just what tends to happen during this season. And right now, again, the low is the last week of October before it rallies. The pullback starts somewhere in mid to early October. You see a pullback, and then somewhere right here at the end of October, at the end of this month, we may have a buy. Or perhaps whenever we see a pullback, should we see a pullback in price, that could be it. And we could see a really solid move. This right here is a plus 10% basically, from 8% to 18% to end the year. And that's on the average over the last 10 years. So that is seasonality for Lowe's. Again, if we go back to our normal view here, you'll see how strong this thing has been. Lowe's and Home Depot were also on our buy candidate list back here during lockdowns, and mentioned, there's going to be a lot of folks wanting to improve, and that was the low. We've done tremendous off those lows, 60 to 170. Now you see a nice uptrend here with nice compression and the potential to go much, much higher again to end the year. But first, are we going to see a pullback at the end of October that could get us going higher? So again, with this one, very, very strong. Any pullback, I would say 150 would be a great in for a continuation higher. This one could be a great candidate to end the year. And for that, you can also extrapolate that analysis over to Home Depot as well. Home Depot has the same seasonal tendencies as well. You can see the same type of chart here for this one. So if you like this one better, or you find a better option or a more cost-effective approach to enter these ideas with one versus the other, you have a couple of choices there. So HD looking really solid here as one of those seasonal plays as well. All right, so we have a lot of other ideas here. Now, one thing I wanted to do was talk about these types of candidates here, which is Nuance. Nuance is one that we had as a buy candidate over the last couple of rotations. We had it as a buy candidate here. Again, on this day, even though it gapped down and it's tremendously moved higher, month over month, since today is the first trading day of October, at the end of the month and beginning of the month, what I tend to do is run my monthly scans. My monthly scans are looking for a lot of the scenarios that we look at in the book. Higher value relationships, lower value relationships, etc. That's higher value, higher value, higher value, higher value, right? All since the lows. And so that tells you that things are trending up. And then you look to buy the pullback and push it higher. Buy it, right? Buy it and push it higher. And so until price fails to hold the midpoint of the previous month on the closing basis, see that point, right? Until it fails to hold it, this is still trending up. Which means when you find a very good candidate like this that is going great, you continue to go back and milk that candidate until it fails. And so right now, this is a great candidate for a buy the dip opportunity, a buy the dip at the monthly pivot range here, and you look to push this thing higher into the next month. And so again, until proven otherwise, this is still one of those candidates. Now this is not ready to buy at the moment. What you want to see is a flush back down into these three pink lines, and then you want to see price start to reject and push higher. So a flush like this can get you going, a flush like that, or like this where you pull back, boom, pull back, boom. So this is one of those candidates. Another one like that is that we've had on our buy list here is Run. Sunrun has been very, very strong. This thing has exploded higher. Again, buy the dips, at the PIMA trigger zone. But then when you come into a higher value relationship, look at the first couple of days of the month. They keep it up here. First day of the month, they keep it up here, and then they whoosh down. They buy the dip and boom, back up. So this was a buy the dip candidate here and a re-energize on that move as well. And this thing's been up on like 3, 4, 5, 6, 7, 8% per day. We had an initial target on this pullback that we might get to 70 or 72, and then on this one maybe 78 to 80, and this thing has already surpassed that so fast. 82.42 the high on this move, just tremendous. But the next pullback, as anything below 70 likely is a jumping off point for this one. But let it pull back, let it clean some of these weak hands out, and then look to pick it up and return it back up. This one looks really, really solid again as a buy the dip candidate, just like Nuance. Another one here that we have to watch is T-Mobile. This is TMUS. Now this one looks fantastic from a higher time frame perspective, like a weekly chart. So we'll look at that as well, but also from a daily chart perspective. This has an inside value relationship, so the pivot range for the month is inside last month's range. You can see the compression here of this price action, and now we should likely see some sort of expansion event or increase of volatility this month. The fact that we've been trending up and then we have this kind of flag pattern leads me to believe that we have a very good potential to squeeze higher. Above 117s really opens it up to the upside and looks really good. If you look at the weekly time frame, for the same reasons here, you can see the buy the dip at the PIMA trigger zone, the uptrend, and look at these sell signals here, but price closing above those sell signals. Obviously, it's hard to look at a weekly chart on a Thursday or any day that's not a Friday afternoon because the tail can change tremendously. By tomorrow, we can close and have a sell signal, for example. But the way it looks right now, the way it's above, looks like it's ready to squeeze yet again. We may be looking at a pretty significant move ahead to the upside, but we might need some sort of shakeout leg first, some sort of really good shakeout to really get things going. But right now, the inside value relationship shows that this thing might have a shot to go. Another one here to keep an eye on is ATVI. ATVI is very similar to T-Mobile in that it has the potential. It's been very strong, and it has kind of this this downward sloping flag here where it may really open up to the upside pretty soon here. The weekly chart looks that way as well, and overall this current lower value relationship here with a change of bias, and then it explodes higher to begin the day here for the month, that's pretty solid. Again, all it has to do is continue to hold 80 here, and it has a shot to go higher into 88 and much higher. So there's a plus 10% that could be seen just to the edge. But the reason I like this as well is if it can get above this zone, it really has some open air. So right now it's trying this area right here. You can see how much resistance is right in that area. So if it can't get through that zone, obviously it rotates back down. But right now it's so close. If it can get through that 84s here, it really opens up some upside, and this trend can continue. So just keeping an eye on this one here. But again, when you're looking at a lower value with a change of bias, it's very clear the downtrend is intact here, and it could easily do this. But above 84s here is where that squeeze begins. Not sure it's ready right now, but if it is, we'll see with a push through 84s. Here's BIIB. Now this is a very short-term idea right now that could also become a bigger idea. But right now it has a 4-day narrow range that's very, very clear. You can see right here 54% of average right there. So when you have a narrow range like that, it's clearly waiting for something. There it is visualized down here. You can see whenever it gets like that, it tends to pop, or it tends to get some sort of expansion phase, right? So it gets here and then boom, right? Last time it was here and it got that. This one was narrow here and we got this movement here. This one was narrow here, big gap up. Hard to know when it's going to gap like that. But this right here is narrow. 19.4 points is about what we'll likely see in order to turn this thing blue. We got to get there. And it doesn't seem like a lot of points, quite frankly. 19.41 points. If you look back, it easily does that on a 4-day range basis when the volatility picks up. So I think there's a really good shot to see about 19.5 points ahead. If you use the low here and say that's 20.5, 19.5 plus 20.5 gives you cha-ching 300. So we might be looking at a move up to 300. Again, we have a key range, sorry, not a key range, a narrow 4-day range here. Our PivotBoss Advanced ADR indicator quantifies that it is narrow. Compression leads to expansion. The reason I'm pointing to the upside is because the tail here is to the upside. It's a bullish outside day. Lower value relationship for the month, but it closed above it, so it's a lower value with a change of bias, a bullish change of bias. That means by gapping up here, the drop should be bid, and that changes the bias of this chart. So 300 could be ahead for BIIB. That's a very short-term idea as well. Shouldn't take long to see that move if it's going to make it. And even just if this is a 1-day breakout trade, it could be a pretty solid 1-day move. One of these 1-day moves that looks, you know, like one of these big days or one of those big transitionary days that takes you somewhere, right? So it's going to likely be one big move to 294 and then maybe mess around to get you to 300. So something like that. But this one looks like a very good breakout candidate here. All right, another one here to watch is Tdoc. Tdoc has been on my list for a while here because it's been such a great mover. It's been phenomenal in its key ranges, its rejections, and its trend. The trend has never been in doubt, although the volatility of that trend has definitely increased. You have kind of this thing here. So and the fact that this thing is widening just tells you that already the volatility is increasing. But one thing we are seeing is a respect for market structure, a respect for the bottom edge of the range. And this was also a lower value with a change of bias, a bullish change of bias, which means we may be ready to see the next upward wave ahead. If this thing can get through 230, the target above is 272.17. It's that 100% target right there, 272.17. Again, above 230 here opens up this target above. That could be a great trade ahead, and that could just kind of be lowballing it too. It might get a bit above it because the volatility has been more exacerbated during the latter parts of this range. So again, this could be a great continuation up if it can get above 230, and another one to add to the watch list here for the month. The next one here, now this one's MKC. You can see we had a rejection here to end the month, and then you had a couple of digestive days here. And this is happening kind of at a market structure level after it broke up. That looks really good for a push higher if it can continue to hold above 190, or more specifically the 188s. But I really like the weekly time frame here. If you look at the weekly time frame, that rejection, and again, I want to caution here that this one is a weekly signal right now. Weekly signal, but today is a Thursday, so we have not finished the weekly signal. By tomorrow we could close, you know, below that level and it's gone. So this whole thing might be moot if we don't close as good or better than where we are today right now. But the way it looks, if it can close good tomorrow, again, you broke through resistance here, you pull back. Look at the bullish Pima trigger zone, a bullish outside week. This could be a great push to at least retest the highs, at the very least. But more than likely push through those highs by some measure here, between, say, 210 and 220, right? So there's a really good shot to push higher here over the next month to couple of months, as long as it can hold the 188 zone. All right, let's see here. Another one here to keep an eye on here is Ulta. Ulta is, let's look at this time frame right here. I'm really big on market structure and where price trades, because it tends to trade in certain zones until it's done with that zone, and then it goes on to the next zone. Here's a zone, right? And you can see the zone here, a wider zone. It compartmentalizes those zones as well into smaller zones like this. And you can see this lower zone here. And then you have the tiniest bit down here as well. This one right here is an inside value relationship. That's what helped me find it on the scans, inside value relationship, which means it could explode out of this range very soon. The trend has been kind of up here a little bit. What really catches my eye about this one is that it's teetering on 228. 228.63 was the close today. If it can get above 228, 230, 260 is the next level up. It just is. That's been the range that this thing has traded in forever as a micro, like, composite of the larger range. And then it also trades below it, right? So it trades below it here, trades below it here. So this thing, the fact that it's teetering this edge, it's either going to come up here to 260 or it's going to fail and come back to 190. 190 is the bottom of the range. So 50 points down, or you know, is it 30, 40 points up? And the fact that we have this inside value relationship that's developed here. You see inside value here is inside there. And then price gaps open and drops into the pivot range to close out of it. That tells me that there might be a bullish lean to this one. So Ulta may be setting up for a move that could be not only up to 260 as a short-term move, because that's the next near term, but it could go up to the next market structure level of 320 as well. That's enough juice in here to do so. So this one is one that may be built of enough energy to get going here in the next phase ahead. Another one here to watch out for is Zoom. I think Zoom is ready to zoom. Bad pun, right away over the next 5 to 7 days. This one, as a matter of fact, if you buy it early tomorrow and close it out at the end of the day, you'll probably be very, very happy. The last time we had it as a buy candidate was here, and we had this narrow range that developed, 1, 2, 3, 4, 5 days, 6, 7, 8 days. And I mentioned we have a good shot to explode higher. Look at that explosive move. I mean, from the low here of 390, it got all the way to 530. That's a huge range. We've now developed another phase, a reaccumulation phase, a re-energizing phase. Look at this, 1, 2, 3, 4, 5, 6, 7, 8 days. So if you come over here and bring it up to 8 days, we'll quantify this range down here. And let's bring it over. Here it is. So right here it quantifies 62% of ADR. It normally has 116 points. It's 72 points. That's these 8 bars right there. And when it breaks out, the potential is about 145 points of range ahead. So the next move could be about 145 points. If we base it off of this low, that puts it as about, what, 610? If my math is right, which it couldn't be right. Maybe it sometimes is, sometimes isn't. But 465 right here plus 145 takes us, 135 takes us to 600 plus 10, 610. 610 could be your next target above in this scenario based on just range. Okay? We're also in an uptrending market, and we're in the PIMA trigger zone right there. We're now out of it. And then you see that if we look up here and look at, I feel like a magician right now. Look at the reveal. And now look how this key range projects exactly to 610. I didn't even know that before, but I knew it was around 600. So right now, this 8-period range is compressed enough and has the energy to explode this up to the red dot. The red dot is 145 points. 145 points from this current low puts us to 610. 610 puts us at the 100% expansion target. 610 could be the next target for Zoom, and it doesn't have to take long. This is an 8-period range, which means we could be there in 5 to 10 days, depending on how crazy it wants to be about it. So that's my thought right there. Now, price can drop as deep as 335, 340 here and reject this lower edge and kind of form a rejection lower low, and that would be the new low target. But based on the key range, 610 will always be the target. But based on this, it just depends on what the true low is. Hard to say that this is the true low when it's just kind of sideways here. I'd love to see a stronger low here, but we may not see that with Zoom because it's just so strong. But this has built enough energy for a 145-point move ahead. That could be pushing us toward 600. So one to keep an eye on right there is Zoom. I like that one a ton. Another one I really like is Bldp. Bldp. Bldp here, what happens is you get these stocks that go very, very bullish here, and then they have to re-energize, 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 and then they go very bullish again, and then they have to re-energize, re-energize, re-energize. And this day today, up 9%, to me, looks like we have re-energized enough to trigger the next move. It looks like today this is a transitionary day. It's a transition from compression phase to markup and expansion phase. So right now, this may be the early in for a move higher. The last time we had this as a major buy opportunity was that day, and we actually talked about the potential for that, and it exploded even bigger than I thought. That was a huge move. This has more energy now. 2 months of great energy. What I like about it, it has a lower value relationship with a change of bias, and then exploded higher today with a buy program all day, at least all morning. Closed on highs. To me, this looks very bullish moving forward. Can it hold 15.5 on a pullback? 1575. If so, we may be looking at much more expansion ahead. So I like this one from a longer term perspective, not just for the month out, but year end and maybe beginning of next year type of thing. So here we are. This is wave one, and here's the next one. Basically we're here again. We're on that day or that week, and here we are, and we're about to do that. So something above 22 and into 26 could be ahead by next February, basically. That's how strong this looks right now. So this could be a tremendous move here out of this one if it can get above 18. It really needs to get above 18 to really capture that upside momentum. But right now it looks really solid. So I wanted to talk about that one from both a short-term perspective and longer term. Short term with this day here, it looks transitionary, but nothing really happens until you start getting above that 17-18 zone. CPB here. This is Campbell's soup. This is a short-term one, and it's not, one of my favorites, but it is one that I think has a high probability move. I'll tell you why it's not one of my favorites. It's because the personality of this one is just all over the map. Sometimes it's dead on arrival, and sometimes it's just crazy here, crazy here, crazy there, crazy there, crazy here. Obviously that's around earnings and things of that nature. And then other times it's just dead and dead. So I hesitate to add this one, but I wanted to at least add those caveats, because having said all that, this one has developed one of my favorite patterns that I like to trade. So you have a range that's developed like this, and then you form a box down below that range, and then you explode back above it, and then you come back and you shake out leg and defend that. When that happens, that tends to be an opportunity for this thing to go back across the range into the upper zone of that range. So somewhere between 53 and 54 could be an easy target for this one up ahead, as long as it can stay above 47. Right? Because that's the zone that was rejected. 47s, it got below it, formed a box. This is a bear trap. Back above, here's the defense, and back across the range. So as long as it holds 47s, I think this thing has 54s. But keep in mind there are caveats, because look at this thing go sideways here. What if we do this for a month and a half and then it hits 54? That might not be worth it. So yeah, we got to 53, 54, but it took forever. So I just wanted to provide that caveat for this one. I think it's a great short-term opportunity. Even if you don't play to 54, this might be a good 1 to 2 week play, or at least for the month. And then from there, it could be, a done deal. Okay, another one here that I wanted to talk about. I have a bunch of candidates I mentioned before. UAA. This is Under Armour. This one is an accumulation candidate here. It's accumulated on the lows for many, many months. Here's your March sell-off, and then it's stuck down there. Then you had April, May, June, July, August, September, right? So that's 6 months here plus some, and a little bit of rounding off. You had a lower low failure and some rounding off, and then what you have also is a nice resistance across these highs. It appears, and I want to be cautious about this, but cautiously optimistic, that it appears as though this may be ready to see expansion above 1250, which could finally open up some of this LVN here that could take us back to 16. The breakdown point here, 16. With all this, you'd think that at some point we start to make our way back and fill this gap. That might take a year, who knows? But with this accumulation here, right? And keep in mind, we might be coming up to the best time to buy, or we are, based on stats. Obviously, election year, got to be careful. But based on stats, November through May is the best time to hold. And oftentimes, the best ones to hold during that time are the ones that have accumulated ahead of that time to fuel that move that will happen from November to through May. So this is one of those ones that may be fueling that energy. If it can get above 1250, it has some good long-term juice ahead. All right, let's see. So those are several of them right there from a long perspective. Now I know that we may see a pullback here given some of the seasonality tendencies. I know the market just reopened here, and I have a lot of things open here, so the market's going to slow things down a little bit here. But this is a sell candidate list right now that I wanted to share. MA is one of those candidates here, and by extension you can also do Visa. But this one is one that looks very similar to the ES in that it is testing that prior pivot high, and it is doing so with lower highs on the right side and kind of a blow off top up here. If we can't get above 350 very soon, we at the very least retest the previous month's low. That could provide an opportunity to buy this thing back up. So you come here and then you buy it back up. You fail there, then you drop back down market structure wise. So this one right here may be a sell candidate here if we drop back below 340. Dropping back below 340 opens up 320. There's a plus 20 down on the downside there. That could happen. Now, I will add as one last caveat as well. This is a very strong stock. I like the stock a lot still from the longer term. I like the entire space, whether it's MasterCard, Visa, PayPal, Square. Those stocks I think are great in this environment, and we mentioned that back here as well in the outlook for April. So I still think overall this thing is headed higher. But in the short term, right now, with August being typically a month that can see some pullback, maybe if we break back below 340, we have a quick test here, and then we might see a bounce. So right now, keep an eye on this. If failure to get above 350 could exacerbate that. Again, Visa is another one that looks identical to that right here. 205 would be the line in the sand right now that it's currently testing here. You can see how that's the midpoint of the previous month's range. A lower high right now. This was a double top or a higher high failure. So again, do we go down here and test the previous month's low and the 200-day, which could provide a bounce again back up, right? So again, I would just say that I like MasterCard a little bit better, but this one is still along the same lines. Another sell candidate here that I have is MCD. Now, McDonald's is a short-term sell candidate here, but it's up against long-term zone up here, and it's really the weekly chart that I like, I believe. So from a weekly chart perspective, what I like about this one is absolutely will do regarding GoGo and some of the others. This one right here has a sell squat signal. So that's a squat bar right here, and it's a sell squat. For those of you that are not part of my PivotBoss Masters training, of which I will be hosting a Masters session here next week on Tuesday, and I will be sending out details for that. So for those of you who want to learn more about PivotBoss Masters, we will be hosting a session here next Tuesday, and I'll get back to you exactly with details on that. We'll do another Zoom webinar as well. And then from there, we're going to be doing some live sessions for Masters at the latter part of October. So this is going to be some good time and some good training here with Masters. And one of the things that we talked about was squats, and we developed that technology for our traders here in the last rotation. That sell signal right there, or that bar rather, is a squat bar, And a squat bar would be one of those bars where you have a ton of volume up there, but it's also a smaller range than average. And so that can tend to occur within the top 2 or 3 bars of a move. And so we've just rallied from way down here all the way up here, and then this squat has developed. That could tend to signal maybe this is a top, and then you see a pullback that can happen from those highs. So again, this is a weekly time frame chart, and we're seeing a rejection off the midpoint of that signal, and here's the highs back here. So you can see how the market is responding to these recent highs. When it got up here last time, it pulled back to 190. It got over here again, pulled back to 190 and then some. Obviously that was crazy market. But then over here back to the level, do we pull back some degree, and is it 190? Is it 200, 205? So again, just on a short-term basis, if price can't get above 223s here pretty soon here, maybe we rotate back down, and that could play in a bigger. So this is just a squat bar that I wanted to show, and that it could be indicative of a near-term top in this chart. Another one here is CDAY. Let's get this over here. So this one, is sitting right at resistance. It has formed a small range bar right here at these highs. It's formed it right below the previous month's high and above the previous month's close. And this is also a sell squat signal. So again, another low range day with higher volume than previous, and it's happening at an edge. By the way, this was a sell squat bar as well. This was a sell squat bar right here as well, right here. And they're all forming right at that level, right, which is the 84 zone, 85 zone. And again, if this bar is going to form here after this move up, perhaps it could be heavy selling to dump the trade. It could be bears absorbing to, before they turn it back down. But in either case, this target on the other end of the range is 68 to 70. So 68 to 70 could be the next zone ahead. But then you bisect it here and say, hey, if this is going to reject the high, you take it back to the mid. The mid is just above 76 at 76.67, and that's a really great first level target. Take a T1 or take a good chunk off, and then you see if it can get down here towards 72, 70, somewhere in that zone. But this is again another squat sell signal up here. That was a squat sell. This was a squat sell, and those were all the squat sells. There was also this one too right here. So a good one right there. Now, one last one here is AMSC. This is a weekly sell signal. And again, I caution it's weekly because the week is not over. So I have to say these things just in case, because tomorrow everything can change. But look at this resistance here from that zone lately. And then you had a lower zone right in here where it's kind of turned down, turned down, turned down, turned down when it failed. Again, it goes back to market structure. And, this is market structure here, although it was ill-traded. This was market structure up and down. And here we are again, up, big rejection at the high. We'd likely come right back down to 1150 pretty quickly. And if this thing is lucky, it bounces and stays. But if it's like last time and gives up 1150, we drop back to 4.5 or something like that, or at least back to value. So right now, this one on the weekly time frame, again the weekly time frame, which still has another day to complete, is currently showing a sell signal, which could be good for a move back to 1150 very quickly. Right now trading 14.23 last close price, and as deep as the 830 VPOC retest. Of course, we could get all the way down there, but right now that would be the return. So a couple of sell candidates right there to keep in mind as we move forward. Now, a couple of more stocks here I did want to talk about. Actually, just one more here is Tesla, and then I'll jump on to some of the ones that you asked about. Tesla is inside of a key range that I wanted to make sure that everybody has up on their screen here. The key range is from the recent rally that occurred in August. It rallied up and found the top right there, and that was the first trading day, I believe, of September, and it pulled back and got the midpoint in September. That was fantastic because we got ourselves a nice key range there that we can work off of, and it gives us targets to work toward as well. So from that impulse low to the impulse high, look at the next upside target up ahead, 732. It's hard to bet against Tesla sometimes in the current market, right? It's just been all up since last summer. This one reminds me of the Bldp idea a little bit earlier, where it explodes higher and has kind of this pullback energy building phase, and explodes higher, pullback energy phase, and now it may explode higher again. And 617 and 732 are the next upside targets ahead. The other reason I like this one is because it has formed an inside value relationship. Look how narrow the pivot range is. Look how wide it is here. And we've started the month with a gap up, out of range in value, closing on highs. And it could open the door to another massive run to these highs. Again, the key range to continue to watch is this one. So, we could easily rally up here, find resistance, and then I'd be calling for a return back to the mid with an overall uptrending bias. But as of right now, this looks really solid from a higher time frame perspective, and by the end of the month, where are we? It wouldn't surprise me if we've gotten above 500 and are working towards 6 plus here. So that's one to keep an eye on from a higher time frame perspective. And let me just sneak in an Apple as well. Here's Apple. Now, Apple has pulled back tremendously here just from the recent pivot high. What's interesting about this one is that this was the one that held the market down, I think, especially tech, in that it didn't bounce quickly back to that midpoint and grab us a quick retest, which would have given us a key range. Instead, it failed, it meandered lower, it found a low and bounced a little bit, but it still hasn't hit a midpoint. And it just doesn't look like a great key range here from this perspective, although it's very clear that the range is in. That's the high, that's the low, here's the mid. So the range is there, it's just not as clean as I would have liked, right? They can't always be perfect. But this low right here to this high, and it snaps back to the mid, that's very close to being a really good one here, and I think it's there. That might be the one to watch, and that will actually give us even bigger upside targets up ahead. So what I'm going to do right here is just mark that one real quickly. And I'm just going to mark it just kind of eyeballing it a bit. The 89.15 zone is not going to be exactly perfect because I might be a couple of pennies off on either side. The high on this one is there, and then you got around somewhere about there. So that is kind of the rough estimate of the key range. And we can see that if we were to break higher down the road, which again, this is Apple, why wouldn't it at some point down the road? We're looking at a target up here that takes you into the 186.70 zone. So you're looking at a move higher from this key range into 162 and 186 down the road. Down the road. That could be some really great targets here based on this key range. And if we completely fail, again, you have these key ranges down here, targets. I don't know if we get down to 40, 55, but anything can happen. Anything can happen. So that's the idea. I just wanted to give you updated on which key ranges here to keep an eye on for those couple of stocks. All right. Wanted to look at a couple of these requests here. One of them was from above. This UPS. Let's get that going here. So UPS very strong. We were looking at FedEx. FedEx has been on our buy list here for the last month as well. This space has been very, very good during this environment. Lots of things delivered and things of that nature. Higher value relationships have been in play. So having said that, this one has a general uptrend to it that remains intact in my view. But do we see some sort of short-term pullback? You know, right now it looks like we have kind of an expanding thing going on. We're up here with some failed highs, a 4-day narrow range. Let's quantify that narrow range here. 4-day narrow range here. And there it is right there, 62% of ADR. So it's compressed, and right now every one of those days is bearish. So in the near term, I think there's a good shot that we may pull back to this low. And then if we wipe out, say, to 150, it could be a great buy right back up as we head into holiday season and all that stuff. So this one right here with the narrow range at these highs, 12.5 points of range could be seen. 12.5. If you drop this thing down 12.5 from current prices, call the breakpoint 165 minus 12.5, and that puts you right about these lows here. So it's right in line from that perspective. Overall, I think the trend is up, but we may see a short-term pullback right there. That's UPS. Another one was FRG. So this one is FRG. This one is sitting right at highs right now. This one hasn't been around a whole long time, but here's your 26 level right there. That's also your value high, that gray line. It really hasn't wanted to spend a lot of time above that zone, as you can tell, every time it's gotten away from that level. This impulse move right here is really good. Sell off because now that gives you targets down as low as 14 here and up as high as 35.72. So that impulse range right there is very good. The fact that we're trading right around 26 again, we're in that range, so we could easily continue to trade in this range. I would keep an eye on that key range right there and use its boundaries for the next move. And continue to watch 26. Any failure above 26 rotates this thing back down. Okay, the next one here to keep an eye on, let's see, let's look at CAG. Oh, CAG. This is Conagra. This has a great rejection here. I like this rejection a lot. The intraday sell-off and bounce back was great during the day, so it was a well-traded sell-off and rally back up. what I like about this one is, as Dwayne would know, is that this one is a failed new low, so it took out multiple day lows, 1, 2, 3 day lows, and then closed back above those highs. That's pretty tremendous there. That's a failed new low, and it's generally in an uptrending market here. This could be pretty good in terms of strength ahead. Conagra Foods here could be benefiting from the current market environment. This is also post earnings, and post earnings here to get that wipeout, I think bodes really well for this thing to move higher back toward the previous month's high price. Using that pivot low, you also have this target zone on the ADR targets. So a really good shot to reach 39s and then maybe even go higher beyond that. But I like this one as a short-term candidate for the next 1 to 2 weeks at least. Looks really, really solid. Failure to hold 35s on a closing basis would kind of break that idea. Yeah, that's a really good one there. Another one here to watch is, let's see, GoGo. So this is another one here. Let's see. This one was up 3.9% today, holding above the 8.5 level. That's a key level for us right now. A little bit of a head and shoulder type of pattern here for this one at these highs, but it has had an explosive rally to the upside, and I accidentally clicked off of it. So let's go back to GoGo. Okay, so up 3.9%. It's holding above the 8.5 level here. That's fairly good for this one. The market structure is good to hold above the 8.5 level because it opens up 14 ahead. So we talked about market structure a whole lot in this one, and if you look at the weekly time frame here, I can draw some of this out as well. And so here it is. You can see the bottom of that market structure here, and now you have the top of that market structure there at 14. It's exploded higher, and it's trying to keep above 8, 8.5, and in doing so, you know, if it can stay above this LVN now, just say if it can stay above 8, 8 gives you 14. We may drop into 8, but as long as 8 holds or a trap below 8, you get 14, and we may be trading here now. It traded there for a while, then it traded down here for a while, then we had this accumulation phase that exploded this thing up. Now it's got to hold 8 to continue higher toward 14s. Yep, that's a good one right there. Here's GILD. This is Gilead. This one's sitting right on support. I have to probably adjust this lower line now because it's gone down so much, 61.50. This one has really been unable to find support here, or at least bounce here lately. It's just kind of been hanging around down here for like a week or so. You have this major line at 61.50 that's been sitting on. Here's your 70, and here's your bounce off 85, and that's pretty much your range. That's your range. Again, because this one has held above 60 for many years on end here, the expectation would be that it would continue to do so. But perhaps we come down and dip the toe below 60, maybe get into 59.50 or something. That might be enough of a test into the LVN to get the thing turned back to 70 and over time back to 85. But that's basically your range, is 60 to 85. We're at the lower end of the range right now, and we're looking for signs of rejection or for a reason for this thing to go back up. If it fails to hold 80 for any period of time, then perhaps it has the next wave down. But right now, I would be looking for a dip of the toe below 61.50, below 60, and that could provide a nice little bounce. So here's FCX, and this was a question regarding copper's turnaround on the daily. Does the monthly pivot range give any clue for FCX and SCCO? So first off, here's a look at copper. This one was up about nearly 0.5% today. But is that right? Oh no, they restarted the clock here. It's like, that doesn't appear to be right. So they restarted the clock right now in after hours trading. But look at that huge move right there in copper. Copper tends to be one of those ones that if it's moving higher, then the economy tends to be doing well. If it starts to back off, then what we need to watch out what might be ahead. This is a huge break for copper today. A big break on the monthly pivot range, a narrow pivot range here, higher value relationship that went offered, and now we are below the previous month's low. That's pretty tremendous. That could lead to a move back down easily, back toward CVPOC and the 200-day, which are one and the same right now, 265 or so. So this is pretty significant here. If price cannot jump back above 2.9 or the 2.915s or whatever that is right there, that's going to be interesting here, because every time it turns down off this zone up here, there's an easy zone of support down below that it tends to get to. So does it pull back to VPOC is going to be the big question there. And FCX right now, based on that selling here, you see FCX down nearly 0.6%. And for FCX here, if it would just catch up for a moment. I don't know why it jumped back on me. There it is. For FCX, nothing has fundamentally changed except for because the trend remains really strong. Look at that right there. That's about what you want. That is phenomenal. You would expect this to happen. Where things change is this pivot range here and this pivot range there. It's higher. But then the blue dotted line is below the bottom of that range. That means that the month closed last month below the upper value relationship, the higher value, which changes the bias and makes it bearish. Which means if price were then to push into the pivot range from below, ideally it's offered. So now you have to watch the midpoint. That point right there becomes the most important point. And above that area squeezes. So everything is still going up right now, but this right here is ominous here and just says watch out, because things may change a little bit there. So that is what I see there with regards to your question about what it may do, or what we may see based off the pivot range here. The SCCO, this one right here was down much more than FCX today, 1.72%. The monthly pivot range, as it pops up here, is inside value with a lower close. So that's an inside value with a bearish bias. And today going offered here early on. So this is one thing that I mention quite often, is that you have an uptrending market here and you have higher value relationships until you fail to close above that midpoint. As it did, it failed to close above that midpoint for the month, and that changed things. And now you have an inside value, and that can tend to be the break of that trend until you get a wider discount and reset. So both of those look like they are at risk of some deeper pullback, but I would also keep an eye on that midpoint. That's where things change. The bias would then change at that level. All right, and I know we're getting into 90 minutes strong here, so thanks a lot everyone for hanging out with me and providing additional stocks to look at. PayPal is the next one here. Here you are. Very good recent buy signal here. Good question here. Do you give signals? Do you tell when to buy and sell? Yeah, if you're in the trading room here, this is absolutely what we do. In the recent market, with the volatility being so tremendous, I have pulled back on the number of opportunities just because it's been extremely volatile. But depending on the market here, absolutely providing swing opportunities for stocks and for the futures and for options, and then also providing intraday trading opportunities as well. Some of our recent buy candidates have done tremendously well, including Run, and Costco, and DraftKings, and some of these other ones, Nuance. They've all done really, really well here from our recent signals. So absolutely. Here's a look at PayPal. This one, again, great trend. Broke the trend here, but gave us a key range. This impulse sell-off back up. This key range is the one to watch. I don't really even have to plot it because the PivotBoss pivots for the month give it to us. And so there's your range high to low. And then there's your 100% target down here, which is 130, 130.81. And the upside target, which is right there, no, sorry, right here, is 253s. And that's your upside target there. You have your 25%, which is obscured right here. So that's your key range. More upside likely ahead for this one overall. But that's not to say we couldn't drop down to this key range and low and work our way higher off that zone. But I think overall, like MasterCard and Visa and some of the others in this group, I really like PayPal. I think the overall this overall industry group is just very conducive to the current market environment and for future environment. You can see how tremendously it's bounced from the March low higher. So I think what happens after this is you either build a market structure up here and kind of build energy. After a big move, you build some energy and then you fuel the next one. Build energy and fuel the next one. Build energy and see if we can fuel the next one. So overall, I like this one, and we have ourselves a really good key range here to watch. Yes, good question by Abdul here. I would certainly prefer to be at a key range low to enter a trade, but rejections at the midpoint to play back to the key range high are absolutely in play. And so knowing where those traps are and where the opportunities are against the key range is very, very important. All right. So really quickly here, I wanted to show, if you go over here, this is pivotboss.ecofin.com. pivotboss.ecofin.com. You can see right there, you can log in here. If you don't have a login, you can sign up. It is free to join up. It is free to sign in or sign up. If you want to jump into one of our premium rooms, right? We have a premium room. It has additional training. It has additional discussion regarding trades and entry ideas and signals and all kinds of things. Then you can do that as well. It's $99 a month, but you can use the coupon code coupon-50, and that'll get you in. And so really, let me let's see here. Let me bring this over here and do this instead. So over here, this is a different one. So that's where you can sign up to get your account here, and pivotboss.ecofin.com. If you just want to go straight over here and go to pivotboss.com/trial offer, 50% off your first month. It's $99 per month. If you use this coupon code at checkout, coupon-50, you get 50% off. So if you click on join now, it takes you here. You say, hey, I have a coupon, and you put coupon dash 50 and apply it. This will magically drop down. Oh, do I have to go coupon like this? Ah, so it's case sensitive. So it must be case sensitive. So now we have that $49.50 right there, and that gives you half off of your first month. So again, you can go to pivotboss.com/trial offer, or you can just sign up for the free account and then click on the room and do it from there. So just make sure you use coupon dash 50, and that'll get you in 50% off of your first month. But we have 24-hour access to our EchoFin 2.0 trading room. We have the live trading room, which is our premium trading room, push notification trade alerts, live screen share with audio, which we use with our Zoom meeting, PivotBoss proprietary indicators and tools, which are available for multiple platforms. The one we use most here is Thinkorswim that I use most, but there's many others that we have tools for. And then we also have on-demand training, which is our 10-part executive training series, and our 5-part signature setup series as well. So there's 15, 16 videos easy just from that training, in addition to our proprietary indicators and tools and our signals and analysis and all the things we do in there. Not to mention access to some phenomenal traders in that room with an incredible dearth of experience over the wide range of decades. It's just incredible to be part of that room. And so all of that for just $49.50 for the first month. It's the best deal, in my opinion, on the net for traders. So give it a shot here. Again, what many traders end up doing is actually trying it out for $49.50 for the first month and then asking me to upgrade to a 6-month or a yearly, because then you get a couple of months free or a free month there. So a lot of times, you make a good trade in the first month or so, they upgrade to the next level up so that now you're in the room and everything is forward gains from there. So again, you can go to pivotboss.com/trial offer to get more of that. I will be also sending out some communications here regarding PivotBoss Masters. We will be hosting a session here next week and offering some live training for those of you who are part of PivotBoss Masters. As you know, any live training we do and live sessions are all free and included with your lifetime membership. If you are new to PivotBoss Masters, then you would basically pay a one-time fee, and then you have all of our library at your disposal, and then you have anything forward, including any new indicators, new signals, new training, new live sessions is all free with your ongoing membership there, which is a lifetime at no additional cost. So anyways, we'll be discussing that more later on. So please give us a shout here at pivotboss.echofin.com, or you can go to pivotboss.com/trial offer, and we can get you in the trading room. Everyone, thanks a lot for joining me for the monthly market outlook for October 2020. A ton of candidates here for the upcoming days and weeks ahead. We'll see how they play out heading into Q4. Everyone have a fantastic evening, and I will see you on the trading room. Take care.